Are you looking at a falling knife loaded with sell signals? Or, is this a radically undervalued hidden gem just waiting for a breakout?
That really is the question right now, isn't it?
It absolutely is. And that's exactly what we're tackling today as we jump into Datavault AI Inc., ticker symbol DVLT.
Yeah, DVLT. It's a wild one.
Right. And hey, before we get too deep into this, please like the video, subscribe to our YouTube channel, and honestly, it is compulsory that you leave a comment with your feedback on this stock down below.
We definitely want to hear what you guys think.
For sure. And just to be crystal clear, this deep dive is a natural debate. We are just exploring the real-time data here. Absolutely no financial advice is being given.
Right, none at all. We're just, looking at the numbers.
Exactly. So our mission today is to dissect the data as of today, which is April 13th, 2026. We need to figure out what is really going on with DVLT.
And to really understand their current identity crisis, you have to look at the massive pivot they just pulled off.
Yeah, the pivot. I mean, up until like 2025, they were doing wireless audio, right?
Exactly. The WiSA market, hardware, physical speakers. And then they completely slammed on the brakes and pivoted straight into AI data monetization.
Okay, let's unpack this.
Yeah.
When you look at the income statement from fiscal year 2024 to 2025, it is total whiplash.
Oh, it's staggering.
I mean, net revenue skyrocketed 1,362%. They hit $39.08 million.
Which sounds incredible on paper.
It does. And gross profit was up nearly 8,000% to $30.4 million. If you just see that, you're thinking, wow, they cracked the code.
But what's fascinating here is the cost of actually executing that pivot.
Right, because killing a hardware business is not cheap.
Exactly. You're liquidating inventory, paying severance, and simultaneously spending a fortune on AI infrastructure. So the reality check here is their bottom line.
The losses.
Yeah, the losses. Operating losses hit $32.4 million. And the net loss, a staggering $78.99 million.
$78 million. Wow.
Yeah, that's an earnings per share of negative 52 cents. They are bleeding cash.
Which leads us right to the balance sheet. And honestly, this is where it gets kind of funny, but also terrifying.
Oh, the balance sheet is a masterpiece of modern accounting.
Totally. They show total assets of $274.7 million. Sounds great, right? But it's like a friend who claims they're a millionaire, but when you look closely, their wealth is entirely in rare Pokemon cards and good vibes.
That is probably the most accurate analogy I've heard for this.
Because I look at the sources, and $92.2 million of that is in crypto assets, and another $94.8 million is in intangibles.
Right. And you can't exactly pay your server bills with goodwill and volatile crypto.
No, you really can't.
And that highlights the critical danger here. Their total liabilities are sitting at $36.7 million. Their operating cash flow is deeply negative, like minus $23.6 million.
Wait, so how much actual cash do they have in the bank?
Just $2 million.
$2 million. Are you kidding me?
I wish I was. Their actual cash position has dwindled to just $2 million.
So with a burn rate that aggressive and only $2 million in the bank, how is the actual stock holding up under that kind of pressure?
Well, it's complicated. As of today, the stock is trading around 69 cents, 0.6969 to be exact.
Okay, and it's up a little bit today, right? Like 2.49%.
Yeah, which gives them a market cap of around $425.92 million. But you have to look at the history.
Right, the 52-week extremes. The high was $4.10, and the low was all the way down at roughly 25 cents.
It's just a violent range. And the volume right now is super interim, around 7.7 million.
Which is really low compared to their average of 48.5 million.
Exactly. Yeah. The hype has definitely cooled off. From a technical analysis standpoint, the current trend is solidly neutral to bearish.
So they're trapped under their moving averages.
Yeah, firmly trapped. The 50-day moving average is at 69 cents, and the 200-day is way up at $1.01.
Meaning anyone who bought in over the last few months is basically underwater.
Pretty much. Now, the RSI, the Relative Strength Index, is sitting neutral right around 47 to 48.
Okay, so it's not oversold yet, but what about the MACD?
The MACD is actively flashing a sell signal. It's indicating some real short-term weakness.
Is there any floor to this?
Well, there is an immediate strong floor at about 55 cents. But if you want to see a bullish reversal, it has to break major resistance at 76 cents.
Got it. So the charts look incredibly weak, which honestly begs the question, if the trend is this bearish, Who is actually trading these millions of shares right now?
That is the big mystery, right? Because there's a massive tug of war happening behind the scenes.
Yeah, let's talk about the big buyers, because the institutional buying on this is shocking. Tier 1 institutions like Vanguard and State Street drastically increased their positions in early 2026.
Like massive increase.
Vanguard went up roughly 2,900%, and State Street increased by 2,800%.
Which looks amazing on the surface, but if we connect this to the bigger picture, you have to look at what the insiders are doing.
Right, and here's my pointed question. If the smartest money in the room is buying up shares by the truckload, why are the people actually running the company running for the exits?
Yeah, they are literally sprinting away.
Over the last 3 months, insiders have sold $13.5 million in shares.
Yeah.
And there have been absolutely zero insider purchases.
Not a single share bought by the people who see the internal books.
So how does that make sense with Vanguard buying?
Well, Vanguard and State Street manage passive index funds. If DVLT gets added to a microcap index, they are algorithmically forced to buy it. It's not a fundamental endorsement.
Ah, so it's blind buying by the robots, while the human executives are cashing out.
Exactly. And the overall market sentiment reflects that fear. The consensus is strongly neutral sell right now. 6 out of 9 technical signals are screaming sell.
And the short interest is huge too, right?
Passive. 14% of the float is shorted. That's 79.2 million shares actively betting against the company.
Wow. And the days to cover.
It's sitting at 1.3 days to cover. So if a short squeeze does happen, it would be violent.
Which leads directly into the ultimate debate going on right now. Is the market mispricing this, or is this a massive trap?
The analysts are completely split on this.
They really are. MarketBeat has a consensus of hold. Public.com is calling it a strong buy. But then Maxim Group just slashed their price target from $4 down to $3.
It's all over the map.
But here's where it gets really interesting. The undervalued case actually has some compelling math. Some of these bullish models suggest a fair value of $4.20.
Right, and that's based on a pretty aggressive 4 to 7 times revenue multiple.
Yeah, but only if they hit their ambitious 2026 targets.
If being the operative word there. Because the value trap case, and by the way, Investing Pro currently classifies them as overvalued, the trap case is all about survival.
The downside risks are just extreme.
Exactly. Retail traders get trapped here all the time. They buy into the shiny AI and crypto hype, and they totally fail to realize the massive volatility.
Because of that $2 million cash reserve.
Yes. $2 million is not enough to survive. They will likely have to dilute the stock heavily, issue new shares, and wipe out the current retail value just to keep the lights on.
So with the bull and bear cases so sharply divided like this, what upcoming events will finally tip the scales one way or the other?
Well, short-term, expect extreme weakness and high volatility leading up to the May 14th, 2026 earnings call.
Oh man, the earnings call. What's the projection?
It's dismal. EPS is projected at -8 cents. The market is bracing for bad news.
Oh wait, they literally just dropped breaking news today, April 13th, to try and change the narrative.
Right, the Biconomy exchange announcement?
Yeah, DVLT just announced a new listing of a meme coin portfolio and an institutional real-world asset, or RWA suite.
Which is a huge swing. They are leaning hard into the medium and long-term guidance with this RWA stuff.
What are they actually projecting for 2026?
They are projecting $200 million in revenue for 2026.
200 million? From where?
Mostly driven by $750 million in newly signed tokenization contracts. They expect those to yield about $77 million in pure fees.
Oh, wow. So if they pull that off, it changes everything.
It really does. It perfectly frames the two completely different realities the stock could experience over the next year.
Let's summarize that, actually. The bull versus the bear scenario.
Yeah.
In the absolute best-case recovery scenario, that massive revenue growth actually happens.
Right. The institutional backing holds the floor.
Exactly. And the RWA focus actually pans out. The contracts execute, they collect the fees, and the stock hits that $4.20 fair value.
It would be an incredible turnaround.
But the worst-case continuation lower. The cash just runs out.
Yeah, the $2 million is gone in weeks.
Massive losses continue, the tokenization contracts are delayed, and that $13 million in insider selling proves to be the canary in the coal mine. The stock crashes back to 25 cents or lower.
A textbook value trap.
So, what does this all mean for you listening right now? Well, this deep dive really highlights the absolute necessity of looking past those flashy AI and crypto headlines.
You have to read the actual balance sheet.
You have to. You can't just buy the buzzwords. If a company has $2 million in the bank and is burning cash, you are taking on massive risk, no matter what the press releases say.
And, well, this raises an important question, something really fundamental to their whole business model.
Yeah.
With a balance sheet loaded with crypto assets and the company basically betting its entire future on real-world asset tokenization, what happens to DVLT if the shifting regulatory environment suddenly decides to crack down on RWA frameworks?
Oh, that's a chilling thought.
Right. If the regulators change the rules, those $77 million in fees might literally just vanish overnight.
That is definitely something to mull over. Well, that wraps up our deep dive for today. Thank you so much for joining us. Once again, please like and subscribe and leave your thoughts in the YouTube comments down below. We want to know if you think this is a hidden gem or a falling knife.
Thanks for tuning in, everyone.
See you on the next deep dive.